Hey, this is Danielle. Welcome to the free video. So, as I'm sure you may have noticed, there's been quite a bit of volatility in the market. One of the main things that makes it very obvious when there's volatility in the market is going to be these very large overnight gaps. So, for example, here's the S&P. We had a nice short squeeze on Friday, really Thursday and Friday. After the put call ratio got incredibly high and we saw 2 decent days of upwards price action. But then there was some news over the weekend, and you can see that the S&P, I think it was down about 2.5% at one point, but then it ended up climbing higher throughout the overnight session and into the Russia and Ukraine meeting, at which point it sold off and then it reversed on the lows and traded higher. So a lot of people have been asking, what can you do in crazy markets like this? Honestly, I think the best thing to do is learn how to read price action on an intraday basis, even if you're a swing trader and you don't want to day trade. I don't day trade a lot. I do trade the indexes every now and then with some of these setups, but the most important thing is to be able to read price action so that you're not getting in at the wrong time or getting out at the wrong time as it relates to your swing trades. Because, I mean, can you imagine if you were coming in like down here at the lows getting short and then, there was 3 days of a short squeeze going against you? Well, it happens a lot. And one of the main factors that you need to look at is going to be the put call ratio. So I like to use the put call ratio on a 5-minute chart. And basically what this chart does, and I mean, this is totally free in Thinkorswim. What this chart does is basically it demonstrates the direction that the put call is going. So when the put call gets super low, that's when there's way too many people long. When it gets super high, there's way too many people short. And that's when you end up getting, these massive market moves in the middle of the day or overnight. Some other factors that I like to look at are going to be the vol spread. This is going to be a measure of the volume up versus the volume down. So basically, if there's more selling than buying going on, you're going to see this trend lower. And then when you start to see a shift like that, that is indicative of the fact that, buying volume is coming in, which tells you that, hey, things are shifting directions right here. Then you also have the UVXY. This one's been really important lately because the VIX has been at levels that we have not seen for quite some time. When you're focusing on a daily chart, for example, let's see if I can pull up a daily chart here. The VIX was up at about 30 today. And there have been a few times where it made it up to those highs at the end of January and then in the beginning of December. But other than that, I mean, it's been pretty rare that we've seen movements up to that level in the VIX. And especially last week, I mean, it got all the way up to about 37. And right at this point, I mean, still doesn't look like we're going lower. Yes, we did reverse at 37.5, but we've got the squeeze, we've got a positive trend. I mean, nothing about that strikes me as it reversing. So the moral of the story here is that we're going to continue to have volatility. I think it's very likely with the Russia-Ukraine situation, in addition to the Fed, inflation, earnings revising down, everything else. So I also like to look at the UVXY on an intraday basis in addition to looking at the VIX on a daily basis. So this just gives me an idea for how the VIX is trending, which also helps me make decisions on an intraday basis. Whoops, nope, don't want to be selling that. So anyways, these are just a couple different things that I look at throughout the day. Definitely want to look at the S&P, the Dow, the NASDAQ. These are 5-minute charts just to see which direction the market's going. The yen is a nice spot to look to just because these can be correlated assets. Doesn't always work perfectly. Like today it was going up and the market was somewhat going up. But looking at crude and gold as well, especially in the current market environment, is pretty important. So these are some factors I like to look at in volatility. There's also multiple ways I like to change what I'm doing in a volatile market situation, especially as it relates to options, how I'm trading overnight gaps and moves at the end of the day. So I'm going to be doing a free session, and I'm actually going to be giving out this grid. So if you show up to the session tomorrow, you're going to be getting this grid that I use every day. This is a free version for you to have, and I'm going to show you how to use it. So if you want to check that out, you can go to simplertrading.com/key. I'm calling this a free session because this is not going to be like a typical webinar where I use a bunch of slides and stuff like that. This is going to be live charts. We're going to be going through what is important right here, right now, based on, whatever the price action is tomorrow and what we're looking for into the next couple of weeks. So if you want to check it out and pick up that grid, go to simplertrading.com/key, and I will see you tomorrow at 3:15 Central. Have a great rest of your day.
Hey traders, it's Danielle here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to like and comment down below. Also, be sure to subscribe and click the bell icon so you will never miss the latest take from our trading experts. Did you know that we provide real-time trade alerts so that you know exactly what we're doing, exactly when we're doing it? Go to www.simplertrading.com to learn more. Good trading, and we'll see you in the next video.